We're TTB, the Alcohol and Tobacco Tax and Trade Bureau.
Hello, and welcome to TTB Boot Camp for Wineries Reports and Returns. This segment of the series will go beyond the basics and walk you through winery operation reports and excise tax returns. The slides for this presentation are available on the bootcamp page at ttb.gov for future reference material. Let's go over our legal disclaimer. This presentation is not intended to establish any new guidance or set forth any new policy. Our goal is to help you understand the laws and regulations administered by TTB. Also, the information we're sharing today could at some point be superseded and become outdated. So always consult the most recent laws and regulations for current requirements. Today, we're going to be discussing winery operational reports, excise tax returns, and how the wine flows between those. To be able to produce wine for sale, you must first qualify as a bonded winery and obtain a TTB basic permit, if producing wine with 7% or more alcohol by volume. Some wines require formula approval. If formula approval is required for the wine you are making, you would obtain it prior to production. Wineries are required to keep records for all their operations, starting with the materials coming into the winery through the product leaving the bonded premises. Before wine can be bottled, you must have label approval or an exemption from label approval if your product is only for sale in the state in which it is produced. This applies to wine with 7% or more alcohol by volume. Once you have label approval, the winery can bottle the product and it can be removed tax determined. File tax returns and reports and report any changes to your business that happen after your original qualification. We will start today's segment with reports, how to complete them and when to file them. Then we will dive into returns, how to complete them and when to file them. And lastly, we will highlight the top compliance issues we see with reports and returns. As I said, we will start with reports, including when and how they need to be filed and what information you'll need for your return. To start, it's important you ensure you complete the correct version of the report. Due to changes made by the Craft Beverage Modernization Act, or CBMA, the previous versions of the report are no longer valid. In the records segment of this bootcamp series, we covered wine records. One of the reasons that complete and accurate records are so important is that you will need to complete your report of wine premises operations. When completing your report, you should have on hand the production records, the bottling packaging records, and records that detail any additional steps your product went through, sweetening, addition of wine spirits, etc. The report is completed in wine gallons only. A wine gallon is a U.S. gallon, a United States gallon of liquid measure equivalent to the volume of 231 cubic inches. Reports can be filed either on a monthly, quarterly, or annual basis. You can file electronically through pay.gov or by mail. Electronic filing is faster and makes amendments much quicker and easier if corrections are needed. If you know you aren't going to be operating and you are a monthly or quarterly filer, you can state it in the remarks section of the form to let us know when you won't be operating and when you will resume operating, so we know when to expect your next report. If you don't have any activity, you won't have to file the 0 reports if you notify us first. You might be asking how you know if you're a monthly, quarterly, or annual report filer. You can file annually if you expect to have no more than 20,000 gallons on hand in any one month and will file an annual tax return. Existing filers would need to notify TTB in the remarks section before transitioning to a different filing schedule, while brand new operators would file a letter notice to TTB to notify us of your intent to file annually. Your report would be due the following January 15th. We will go into more detail on due dates on a future slide. You can file quarterly if you expect to have no more than 60,000 gallons on hand in any one quarter during the year and will file quarterly tax returns. Again, you will use the remarks section of the report or a letter notice to notify us of your intent to file quarterly. As a quarterly filer, your report will be due 15 days after the end of the quarter. If you don't meet the requirements to file annually or quarterly, you will file your operational reports on a monthly basis, which is due on the 15th of the month after the end of the reporting period. Now that you know your filing frequency, let's cover due dates. As I mentioned previously, the reports can be filed on a monthly, quarterly, or annual basis. If you do not qualify to file quarterly or annually, you will have to file monthly. Reports are due on the 15th after the close of the reporting period. So if you are a monthly filer, it would be due on the 15th of the month following the month ending the reporting period. For example, if the period is January 1st through January 31st, it would be due on February 15th. If you notify TTB that you won't be operating, you do not have to file the report if you don't have any reportable operations during that period. Taking inventory is a reportable activity, so even if you didn't make any wine during the annual period, taking inventory would have to be reported to us and you would have to file the report. Once again, the report can be filed through pay.gov. The next few slides will walk through how to complete the report. The first part of the report is where you provide information on your winery. First, mark the period to show how you are filing. Next, complete the name and premises address of the winery, your EIN and IRC registry number, which would start either with BWN, BWC, or BW for older wineries. Do not list your FAA Act basic permit or permit tracking numbers. Next in the report is Part 1, Section A, which is where you report all the wine you had on hand at the beginning of the reporting period and what production activity you had to increase your inventory. Line 2 is where you will report any wine produced by fermentation. Lines 3 through 6 show what you produced through the processes of sweetening, addition of wine spirits, blending, and amelioration. When you report on these activities, make sure to report on the entire amount of wine that has changed, not just what you added. For example, if you have 200 gallons of wine and you sweeten it with 5 gallons of sweetener, make sure to show 205 on the produced by sweetening line. Line 7 is what you received in bond from other wineries. Line 8 shows what bottled wine you dumped back into bulk product. Line 9 is an inventory gains in the wine that might occur. Lines 10 and 11 are blank lines that are typically only used for formula wine production or change of tax class. Line 12 is a total of lines 1 through 11. In pay.gov, these will show as drop-downs you can select. The next part of Section A shows what removals you had of bulk product and what you still have on hand at the end of the period. Line 13 is what product you bottled. Line 14 shows any bulk product that was removed from bond. Line 15 shows what product was removed from bond and transferred to another winery. Lines 16 and 17 show what was transferred to distilleries or vinegar plants. As I mentioned above, you must show all the wine used in the production of sweetened wine. This section is where you tell us what was used in that process. Lines 18 through 22 show the wine that was used in the production of sweetening, addition of wine spirits, blending, amelioration, or effervescent wine. Using the earlier example of 200 gallons of wine sweetened with 5 gallons of sweetener, you would report 200 gallons here on line 18. Part 1, Section B of the report is where you report your bottled product. Lines 1 through 4 show what you had on hand at the beginning of the period, what product you bottled from above on line 13, any wine received in bond, and any tax paid wine returned to bond. Lines 8 through 20 show what bottled product you removed and what you still have on hand. This is where you will report what product left the bonded premises tax paid, wine transferred out in bond, bottled product that is dumped to bulk, bottled wine that is used for tasting, exported wine, wine removed for family use, and bottled wine that is used for testing. Line 18 accounts for losses due to breakage, and line 19 is for shortages. Explained inventory shortages must be tax paid. Line 20 is what you still have on hand at the end of the period. Double check on lines 17 and 21 that your totals are calculated accurately. Part 3 of the report is where you report any wine spirits that you use in your product. Wine spirits are distilled from fruit or wine at a distilled spirits plant and can be received in bond by wineries for use in wine. Part 3 shows what you had on hand, what you received, used, and what you still have on hand. Part 4 shows what other materials were received and used to make your product. Grapes, crushed or uncrushed, juice, concentrate would all show in columns A through D. Apples, pears, or other fruit or agricultural products would show in columns E, F, or G, and you would just write in the specific product in the heading. If sugar, dry or liquid, was used to make your product, you would include that in columns H and I. Part 6 shows any materials that were used for distilling material or vinegar stock. Part 7 shows what product is sitting in the fermenter. Part 8 contains a summary of non-beverage wines. Column A is for non-beverage wines not over 16% alcohol. Column B is for non-beverage wines over 16 to 21% alcohol. Part 9 is for certain formula wines that are produced or removed from the bonded wine premises. Column A is for vermouths, column B through E are for special natural wines, and column G is for 24.218 other than standard wines. Part 10 is the remarks and signatures section. This area can be used to report other things you need to tell us. If you have more materials than what you can list, in Part 4, you can list the other materials here. If you are not going to file your next report due to not reporting, you would notate that here. You would also include anything else you think we might need explained. The person signing must have signing authority or have a POA on file with TTB. Now we will be discussing tax returns and how they tie to the reports. Before jumping into the tax return, it's important to understand how to apply tax. Federal tax attaches when the wine is produced but is not determined until it leaves the bonded premises. It is not paid until the due date of the tax return. The tax rate is based on the tax class. Any credits available would show as an adjustment on the return. Similar to the operational report, there are 3 filing frequencies for tax returns: annually, quarterly, or semi-monthly. To be eligible to pay taxes annually, you must not be liable for more than $1,000 in excise taxes in the preceding calendar year and reasonably expect the same in the current calendar year. Taxpayers who are reasonably expect to be liable for not more than $50,000 in excise taxes for the calendar year, or who were liable for not more than $50,000 in the preceding calendar year, can pay quarterly. If filing annually or quarterly, make sure you also are filing the reports in the same manner, and you still meet the qualifications for that reporting frequency. If you realize you've become ineligible for your filing frequency, you must immediately change your filing frequency. To file semi-monthly, taxpayers must file a tax return 2 times per month, 3 times per month in September, if they expect to be liable for more than $50,000 in excise taxes the current and prior calendar year. Please note that if you go over $50,000 annual tax liability, you will also need a bond. Due dates are typically 14 days after the end of the period. If the due date falls on a weekend or legal holiday, returns and payments are due the last business date preceding the weekend or holiday. Due dates can change every calendar year, so it's important to check the current due date schedule on our website. Paying taxes electronically using pay.gov is the fastest and most secure method of payment. It is a free service, and you can get a confirmation to show what and when things were submitted. You can use pay.gov to file your operational reports and tax returns, which allows you to check entries and totals for accuracy. When filing through pay.gov, you must file the day before the taxes are due. If the due date is the 14th, you must file the return by 8:55 Eastern Time on the 13th to make sure the payment goes through timely. Please note that TTB will be phasing out paper checks, and Executive Order 14247 mandates the transition to electronic payments for all federal receipts and disbursements, including those to and from TTB. If you currently pay excise taxes with a paper check or money order, we encourage you to begin transitioning to electronic payments through pay.gov or other electronic funds transfer as soon as possible. If you choose to mail in your returns, make sure to send them to the address on the slide and not to the Cincinnati, Ohio address. This address shows on the tax returns form. Make sure to address it to TTB excise tax. And the address is P.O. Box 790353, St. Louis, Missouri 63179-0353. Electronic payment can also be made via EFT, electronic funds transfer, which is a computer transfer of funds from a taxpayer's financial institution account to Treasury. Any taxpayer who was liable during a calendar year for a gross amount of $5 million or more in federal excise taxes on distilled spirits products, wine products, beer products, or on tobacco products and cigarette papers and tubes must use a financial institution to make tax payments via EFT during the succeeding calendar year. You can find more information on EFT in TTB Procedure 2011-1 or our tax payments by EFT guidance, both on our website and linked here in the presentation. For taxpayers who file semi-monthly returns, it's important to note that September has 3 tax periods instead of 2 periods. As you will see here, the due dates change depending on your requirement to pay via EFT. Note, this is based on if you are required to pay via EFT, not if you choose to file through pay.gov. If you have more than $5 million in excise taxes in a calendar year in any one commodity, then you must pay using EFT the following year. If there is $5 million in taxes in wine, then wine must be paid EFT. But if beer or spirits are under $5 million, then only wine taxes have to be paid via EFT. As stated earlier, it's important to always look at the current due date schedule on our website for accurate due dates. The Safe Harbor Rule was created to help with the September tax periods. It gives you the option of estimating your second September tax amount based on a percentage of the taxes paid in your first September return, as long as all underpayments on that second September return are corrected on your third September return. We will start with non-EFT taxpayers. The 3 September tax periods are broken down here. The safe harbor rule states that the taxpayer is in compliance with respect to its second September tax return as long as at least 66.7% of the tax liability incurred in the first period, September 1st through 15th, is paid by September 28th. For EFT taxpayers, the same rules apply. However, for the second period of September, 73.3% of the tax liability incurred in the first period of September, September 1st through 15th, must be paid by September 29th. For both non-EFT and EFT taxpayers, any underpayment of tax resulting from the use of the safe harbor rule is due on or before October 14th. If you use the safe harbor rule, make sure to notate it on the return so we can see you are paying using this rule. Feeling overwhelmed by all this information and due dates? Fear not. You can sign up for automated reminders on our website. Link is shown on this slide, and we highly recommend you sign up. Now we will walk through the excise tax return. Line 1 is the serial number of the return you are submitting. The due date schedule shows how to sequence your returns. The first return of the year you submit would be TR, then the year, and ending with the number of returns submitted. For example, the serial number for your first return for 2025 would be TR-2025-1. Line 2 is your form of payment. Line 3 is the amount of tax that will be paid for this return. Line 4 is used if you are prepaying the tax liability along with the period covered, which is rare. Line 5 is the date products are removed for the prepayment. Line 6 is your EIN. Line 7 is your registry number. And line 8 is the name and address of the winery. Line 10 is where you tell us the full amount of tax due based on your removals using the full tax rate. It's important to note that you do not take any credits at this point. The credits show as an adjustment on line 20, and increasing adjustments show on line 18. Lines 17, 19, and 21 are total lines. Schedules A and B are where you explain the adjustments you are adding or subtracting on lines 18 and 20. Line 30 is where you report the total dollar value of CBMA tax credits taken on the wine that you removed during the return period. You must keep records supporting how you calculated this number. An example would be 1,000 gallons at $1 credit, so you would show the $1,000 under the tax column. Make sure to total out lines 33 and 34. This slide shows the current tax rates and credits available for artificially carbonated wine and sparkling wine. These rates are also available on our website, and this presentation is posted with this recording. This slide shows the current tax rates and credits available for still wines. Again, these rates are also available on our website, and this presentation is posted with this recording. And the last tax rate slide shows the current hard cider tax rates. We will cover the hard cider tax class on the next slide. The hard cider tax rate applies to certain cider and perry products. To be eligible for the hard cider tax rate, the products must contain not more than 0.64 grams of CO2 per 100 milliliters, be derived primarily from apples, pears, or apple pear concentrate and water, contain no fruit product or fruit flavoring other than apple or pear, and contain at least 0.5% and less than 8.5% alcohol by volume. Other wines labeled as cider or perry that do not fit the definition above are taxed at one of the other wine tax rates. For example, if you add blueberries to your hard cider, it now must change to the tax class of under 16% still wine if it has 0.392 grams of CO2 per 100 milliliters or less. If it has more CO2 than that, it would change to the tax class of either artificially carbonated or sparkling wine, depending on the source of CO2. In addition to pay.gov for filing your reports and returns and paying taxes, you can also file and receive payment for claims online. Through the online claim submission, you can file overpayment, allowance of loss, and return to bond claims. If you submitted a return and paid too much, you cannot simply take an adjustment on your next tax return. You must first file an overpayment claim. It can be filed for a credit or a refund. Some common compliance issues we see are reports either not filed or filed late. Make sure to file your returns and reports in a timely manner. If you are a monthly filer and you won't have to file for several months, make sure to notate it on your last report before you pause filing. Make sure your end of quarter, on hand, end of period matches your on hand, beginning of period amount for the next quarter report. You cannot submit negative returns. If you are taking a credit from an approved claim, only put the credit in for the amount due on the return. Any remaining credit you would just take on your next return. Make sure to take the proper credits based on your removals. Make sure to either file an allowance of loss claim or pay the tax on your excessive losses. Make sure to file an overpayment claim and receive TTB approval of the claim before taking credits on future returns. To wrap up, I'm going to share some useful resources to help you along your journey. There is a lot of helpful information on our website. There is a color-coded operations report that gives a breakdown of each line on the report. Our Craft Beverage Modernization Act page outlines changes that came from the passage of the Act. You can find the regulations, industry circulars, and conversion charts to see how many gallons are in a case. Please get familiar with our website, ttb.gov, and all the information available on it. We hope this information helped you better understand operational reports and tax returns. If you have questions, please don't hesitate to reach out. And to stay up to date on the latest TTB news and updates, we encourage you to sign up for the TTB newsletter. You can do this by searching for TTB newsletter in your favorite search engine and then select subscribe now. Thanks so much for watching, and make sure to check out the other segments in our Bootcamp for Winery series, available on ttb.gov.
Visit TTB's official YouTube channel at USTTB.gov for more TTB-related content. And remember to click subscribe so you'll always know when we upload new videos.